But if there is an escalation, of course, we'll bring you anything that comes from that. Some of the drills, some of the military drills that we were expecting, 3 days of this live fire military exercises around Taiwan in response to Nancy Pelosi's visit started a couple of hours ago. Taipei, though, playing down the impact on flights and shipping. Let's also get to some of the stocks on the move at the open. Now, we have 3 stocks for you. Let's start with Lufthansa. Lufthansa giving an upbeat outlook, as we all know it, because we've all had travel disruption as travel demand, they believe, will also stay strong into the winter months. Lufthansa getting some 6%. And Ambu, this is a stock that we don't look at very often. We probably should look at it a little bit more. It's a diagnostics company, basically healthcare, slashing full-year organic revenue forecast. They're also cutting jobs. And then Crédit Agricole, the investment bank, is driving earnings, and that beat estimates gaining 3%. Now, ahead of Alibaba's earnings later today, the FT has reported that SoftBank has raised cash from selling its stake in the Chinese e-commerce giant. The paper says a Japanese investor has used derivatives that retain the possibility of holding onto the shares. For more on all of this, we're joined by Bloomberg's Catherine Lim from Singapore. Catherine, thank you for joining us. So can you give us an idea, first of all, of how bad these results could be for Alibaba?
Right. So we're talking about the April, May, June months, whereby April and May buying sentiment in China was badly affected by COVID flare-ups as well as Shanghai lockdowns in China. So we're going to see likely a sharper decline in the commerce revenues for Alibaba and a continuation of a double-digit profit fall for the company.
So, Catherine, do you think the worst is over for the company's business in China? What could we find out?
Right. I think from what we have gathered on the ground, I think the sentiment has actually been improving since June, even though it is on a slow recovery. But I do think that the momentum is actually picking up. So we're looking forward to more guidance from the company, which will definitely be a good indicator, not just to consumer sentiment on the ground in China, but also business sentiment, because we're going to be on the lookout to see whether marketing dollars that businesses are willing to put into e-commerce platforms, for instance, is actually on the rise and on the mend post the lockdowns.
So how will an escalation in U.S.-China tensions actually affect Alibaba?
Right. We have seen some of the actions taken by Alibaba in addressing, for instance, the potential US delisting risk, and they are actively see some of the flows coming in next year if all of these regulatory measures and corporate actions that they are taking materialize by the end of this year, and this can actually help lift some of the overhang.
Thank you so much, Catherine Lin there, of course, on the very latest from Alibaba, joining us from Singapore. Now, coming up, the Bank of England could be set to push through the biggest rate increase in 27 years, despite growing risks of a recession. We'll have a full roundup of what exactly we're expecting from the Bank of England. Venram having a wonderful 3 points of 3 things that traders should be watching from the Bank of England. First of all, of course, it's the size of the hike in the voting pattern. He says it's forecast. Even though the inflation is running above what they forecast, it will give us a sense of the pace of tightening needed. And then the third one, of course, is quantitative tightening. This is what European stocks are doing. They're gaining between 0.2 and 0.7%. This is Bloomberg.
ช็อปปลอดภัยกับบัตรที่คุณคอนโทรลได้บัตร B-First Digital ธนาคารกรุงเทพ
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Live fire drills. China starts 3 days of military exercises around Taiwan in retaliation for Nancy Pelosi's visit. On the up, the Bank of England is set for its biggest hike in 27 years. We're live on Threadneedle Street. Plus, a token boost. OPEC delivers one of the smallest production increases in its 6-decade history, rebuffing President Biden's calls to cool prices. Now, onto the markets. If you look at the markets, they're actually pretty much stable. Again, a lot of the focus from investors is trying to assess the corporate profit outlook, not only in Europe, but also what we're getting in the U.S. We're about, I think, 3/4 of the way through in terms of earnings season. We have mainly seen a lot of the big cap stocks being supported. The Crédit Agricole, for example, a little bit better than expected, so that's giving a bit of a lift to the CAC 40. The FTSE is a story not only of pound. We had some pretty bold and outlier call from UBS. I think our Valerie reminded us it was 115 by the fourth quarter, but the focus, of course, is all on the Bank of England. So let's also look at the sectors on the move. Yesterday, we did have travel and leisure up, and it's still one of the biggest gainers in today's trading session, gaining 1.2%. Retail also 1.8%. Energy, basic resources, and telecoms, some of the biggest losers. Now, the Bank of England today expected to push through this biggest interest rate hike in 27 years, despite growing risks of a UK recession. Let's get straight to Lizzie Burden, who's outside the Bank of England. Lizzie, a number of things that traders are wanting to find out, and it's not only about the hikes, but also it's QT and then the pace of what we could see over the next couple of quarters.
Exactly. So in terms of the rate decision, we're expecting a half-point hike, the biggest in the bank's independent history, and probably a 7-2 split with John Cunliffe and Silvano Tenreiro dissenting in favour of 25 basis points. On QT, Governor Andrew Bailey has already said we're going to have 50 to 100 billion pounds worth of QT in the first year, including active sales and letting gilts roll off the balance sheet. So we're expecting more detail on the pace of that, and also maturities across the curve. Are we going to go out of this the same way we came in?
So how should we look at quantitative tightening? I know one of the most difficult, of course, questions is how does quantitative tightening play in terms of financial conditions with the rate hikes?
Well, the Bank of England said that it doesn't want it to be the active tool, but it's really difficult to ignore. And don't forget that it's only the Bank of England who's doing this. You know, the bank has never done it before, but at the same time, the Fed isn't doing active sales. It's just letting government bonds roll off its balance sheet. So the bank is going to have to play it very, very carefully in terms of how it does it. But once we get more information today, it should set the conditions for the Monetary Policy Committee to vote on QT. And then we're expecting sales to start from the September meeting.
How will Governor Bailey, Lizzie, respond to these political pressures on the Bank of England?
Well, Francine, you know, the old lady of Threadneedle Street has become an unlikely star in the Conservative Leadership Party drama. Liz Truss, the frontrunner to be the next Prime Minister, has been scathing about the BOE's record on fighting inflation. And not only that, she said that she would review the bank's mandate. I'd point out that the former BOE Governor, Mark Carney, also suggested reviewing the mandate. So perhaps it's not that radical. But if it comes up in the press conference or indeed in the interviews post-press conference, I expect that Andrew Bailey will continue to defend the BOE's inflation fighting record as he has done so far. He said it's been an unprecedented crisis, they did the best they could with the data, and in terms of the mandate, he'll probably bat it off to the Treasury who set the mandate. But I think that Simon French, the chief economist at Panmure Gordon, put it well. He said the Bank of England is politically independent, but it can't always be independent of politics.
Yeah, as we've seen with the Fed, I think at the time, President Trump had called Jay Powell the worst player and then the most increased value in play or something like that. Lizzie, thanks so much. Lizzie Burden there outside the Bank of England. Now, we'll bring you, of course, that BOE rate decision live at 12 p.m. UK time, and then Governor Andrew Bailey's press conference due shortly after that. Don't miss our interview with the Bank of the Bank of England chief. That's at 4 p.m. UK time. We're back, of course, talking about some of the markets and the three things that traders are watching from the Bank of England. Stefan Ball, a Goldman Sachs chief UK economist, joins us now. Stefan, I guess, you know, it's the size of the hike, the voting pattern, we're looking at the forecast, and QT. What do you think will be most interesting in all of this?
Yeah, I think there's three areas that we'll be looking at. I mean, the first is the vote split, as you were discussing. We're actually calling for a unanimous vote for 50, but I think there's a lot of uncertainty around that. We haven't heard from the more dovish members of the committee. I don't think they'd be thinking about voting for holds. I think it is the choice between a 25 and a 50, and it is possible you get one or two dissenting for a 25, but we think more likely than not they'll all vote for a 50. The second is on the forward guidance, and do they keep the act forcefully language in order to keep a 50 basis point on the table for September? And then the third point is on QT. How much detail do we get? Do we actually get a precise number for the likely pace of active sales going forward?
So, Stefan, what do you think is the right way forward here? Because the complexity of the Bank of England is really not lost on anyone, not only because it's a small open market economy, not only because we're dealing with shortage, gas crisis coming in the winter, but of course we're also looking at political turmoil.
Yeah, I think there's sort of two main factors in play. I mean, the first is wages and inflation is strong and quite sticky. Every time we sort of do a deep dive on the wage front, we find that, it's surprisingly how broad and how persistent the strong wage growths are. And then secondly, on activity. Now, a couple of weeks ago, things were looking quite a bit softer and we were talking about being on the edge of recession, but the last few weeks of data flows look quite strong. We now have small positive Q-on-Q growth for Q2, Q3 and Q4. We've reduced our recession probability from 45% to 35%. So all that suggests that a couple of 50 basis point hikes in the next two meetings seem appropriate and seem quite likely. And beyond that, we think they'll step down to a 25 bip pace for November and December, taking a terminal to 2.75.
Stefan, how difficult is it to see how much additional tightening the program will exert, QT basically will exert on top of the rate hikes?
Yeah, very difficult because we haven't done this before. We've come up with estimates. We've basically taken our estimates of what QE did and shave them a little bit because it's unlikely to have large signaling effects and unlikely to have a large liquidity effect. And so we're calling for a pace of 15 billion a quarter of active sales. That's a total runoff of the balance sheet of about 95 billion over the first year. And we think that translates to about 15 basis points of rate hike equivalent. So, a bit more than a basis point a month substitutability with rate hikes. So some tightening, but, on a quarter-on-quarter basis, you aren't substituting for a 25 bip hike or anything like that.
Yeah, and we just have some great charts. So thank you to Valerie, putting a lot of these charts together. This one is, of course, looking at QT. Stefan, okay, your call, first of all, on gilts, but then sterling. We have this outlier call from UBS, 115 in the fourth quarter. What do you do with pound right now?
Yes, I think it's an important thing to keep watching for the BOE, small open economy, and we've seen Catherine Mann talk about sterling moves more than Bank of England officials tend to. Now, she talked about the bank almost needing to move 1-for-1 with Fed moves in order to guard against sterling falls and importing more inflation. We don't think that. We do see some downside risks to sterling, and I think that given we're looking like we're getting towards double-digit inflation, I think that is a concern for the Bank of England as an inflation-targeting central bank, and it is one to watch.
Yeah. Do you think gilt yields are too low at the moment?
No, we still see a lot of room for hikes. We see neutral at 1.75. So the hike today, if it is 50 basis point, takes us to neutral, and we think that bank needs to go into contractionary territory in order to tighten monetary policy, and we have terminal at 2.75, so a whole percentage point above neutral in order to bring inflation back down to target.
All right, Stefan, thank you so much. As always, Stefan Ball there, Goldman Sachs chief UK economist. Now let's get straight to the Bloomberg. First word news, here's Laura Wright. Hi, Laura.
Hi, Francine. OPEC Plus will raise output by a token 100,000 barrels a day in September in one of the smallest hikes in the oil producer group's history. It comes as a blow for Joe Biden after the US president's visit to Saudi Arabia last month. OPEC members said spare capacity is severely limited and the excess should only be used to respond to major supply disruptions. The US Senate has voted by 95-1 to ratify Sweden and Finland's applications to join NATO, a move aimed at bolstering the alliance after Russia's invasion of Ukraine. If the accession wins approval from all current NATO members, the two countries will join Estonia and Latvia as NATO members bordering Russia. Diplomats from the US, Europe and Iran are set to return to Vienna for another attempt to save their nuclear deal. The US Special Envoy for Iran says he will discuss a European proposal to rescue the 2015 agreement. The accord collapsed after Washington withdrew 4 years ago and reimposed sanctions on Iran, prompting Tehran to ramp up its enrichment program. A group of professional golfers, including Phil Mickelson, are suing the PGA Tour, calling it an illegal monopoly. They claim it's hurting their careers by suspending them for joining the Saudi-financed LIV Tour. The players say that's part of the PGA's plan to thwart the rival tour. The PGA counters that the lawsuit is a bid by the golfers to free ride on its platform. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura Wright in London. Coming up, China kicked off military drills around Taiwan in the early hours of this morning after Nancy Pelosi's historic visit to Taiwan. We get the latest on that next, and this is Bloomberg.
ช็อปปลอดภัยกับบัตรที่คุณคอนโทรลได้บัตร BFirst Digital ธนาคารกรุงเทพ
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Recently, cryptocurrencies have been very popular, If a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 44 minutes into the European trading day. This is a picture across the board. We're seeing a bit of a reversal for the FTSE 100. Nothing huge, but we were seeing gains earlier, now down 0.1%. Overall, European stocks gaining 0.3%. Investors not only assessing the inflation picture, what it means for Fed hikes, but also corporate profits. Now, in the wake of U.S. House Speaker Nancy Pelosi's visit to Taiwan, China has begun military drills around the island. However, Bob McNally, founder and president of Rapidan Energy Group, says he sees a low chance of conflict between the U.S. and China.
We only have about a 5 to 10% risk max that the Chinese and the U.S. will come to blows militarily. And if it happened, it would probably be inadvertent. We don't think Beijing or Washington want to have a military conflict here, any kind of an incident. So I think they'll be huffing, they'll be puffing, there'll be brinkmanship, but I think they're going to steer clear of crossing red lines.
Well, joining us now to talk about foreign policy and, of course, this huge concern surrounding Taiwan Strait is Diana Shoileva, Chief Economist at Inodo Economics. Diana, thank you for joining us. First of all, what was the week that we've seen? Did it make sense for Nancy Pelosi to show up in Taiwan at this specific time, or was it a policy mistake?
I mean, look, it's almost useless to speculate why she decided to do it against the advice of the White House and the Pentagon. And actually, as it has been suggested, against sort of Taiwan's quiet push against the visit. Now that the visit has happened, I think what we need to think about is what does this mean going forward for Taiwan and for Sino-US relations? And unfortunately, markets, even though they don't seem to have realized yet, have woken up to a much more dangerous new normal.
What is the new normal that we could see, Diana? So how does there's a school of thought, one of them saying, like, look, this will force the U.S. and China back at the table. So we're going to see something either worse or bad, but certainly, the status quo is now challenged. And the other one saying that the economic ties will just deteriorate from here no matter what.
Well, the way we have seen things for the past 4 years, during which we've coined the great decoupling thesis that the world is bifurcating into two spheres of influence, a Chinese and an American one, is unfolding just as expected. This is an all-encompassing geopolitical confrontation between the aspiring hegemon China and the existing hegemon the US. The existence of Taiwan makes the likelihood of this confrontation contest to turn kinetic, to involve military blows, much higher than it would have otherwise done. So both countries around the world and multinationals and other global companies have to realize that whether they like it or not, they will be forced, they will have to start picking a side. And we already see the economic repercussions in terms of the redistribution, rejigging, changing of global supply chains.
But Diana, overall, what does this mean for example, some of the support? We saw also China for the first time really abandon some of the targets and saying like this was not a hard target in terms of economic growth. What are you expecting in terms of support? Could we see a China that grows significantly less without that stimulus that many were expecting?
Look, Xi Jinping has reframed the way Chinese economic policy works in the context of the first goal being maintaining national security. And China is no longer interested in growing at all costs. It's interested in quality development. However, whether it will be able to achieve this very difficult transformation remains an open question. And in the process of doing so, it is going pretty much ex-growth. So China's economic development has changed dramatically, and going forward, it's unrealistic to expect them to post strong growth rates or be able to pull the global economy out of the doldrums when it falls in.
Yeah, thank you so much for all of that insight to Diana Shoileva, their chief economist at Inodo Economics. We'll have plenty more, of course, on China, Taiwan, and the U.S. Now, coming up, OPEC Plus promises a small increase in crude output. So how is that going to go down with Washington? Well, we'll discuss that next. This is Bloomberg.
ช็อปปลอดภัยกับบัตรที่คุณคอนโทรลได้บัตร BFIRST Digital ธนาคารกรุงเทพ
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 52 minutes into the European trading day. We're holding on to gains, maybe a bit of fluctuation for the FTSE 100. It is a big day for the UK because of the Bank of England. It's kind of fluctuating between losses and gains, but really pretty much unchanged. Stocks holding to some of the modest gains that we're seeing. Again, corporate profit outlook weighing on investor mind, as are